Andrew Page from strawman.com along with Ben Clark from TMS Capital. Well, great to have you all here. Julia, let's start with you. We've heard a lot about the volumes going through the market today. We're obviously nearing the end of the financial year. And all of this outperformance from the Australian market taking place against a backdrop of trade rhetoric between US and China still. So put it all in perspective.
Look, it's really a sign of strength when we do see days like this and we buck the international trend and continue on stronger. And as you mentioned, Nadine, the countdown is until the end of financial year. And in the financial year to date, the Aussie market is up by 8%. And if you look across the market, it's been a pretty positive one for most sectors. In fact, most sectors on the Australian share market in this financial year have managed double-digit returns. The best has been the energy sector, which has gained around about 35%. And then the healthcare sector, which is up around about 27%. But every sector you go to, it's pretty much double-digit returns, except for those defensive areas, those ones that are exposed to what's happening in terms of the bond market. So they're things like the utility sector, the property sector, the telecom sector, and I guess the banks. These are the only sectors that haven't managed these double-digit returns in the financial year. So it is quite interesting what's happening on the market, and definitely it's been a year that's been geared towards growth. And when you do see days like this where you push past barriers that have been in place for 10 years, it's quite a bullish one for the market near term.
At least today, 61.72, Julia. There were some big announcements out there. We have to look no further than Telstra. Now, we have discussed it already this hour, but when it comes to, I suppose, the wash up by the end of the session, you were on air with us, when this was all happening, when we were hearing from CEO Andy Penn. How has your impression of the announcement, I guess, refined or become more clear throughout the session, or were your initial sort of reactions bang on?
Nadine, the way I look at Telstra's strategy today is looking at it through a short-term lens and then looking at it through a longer-term lens. And look, in the short term, the market was a bit disappointed. What we saw there was a profit downgrade, some interim measures which are seen as band-aids, things like cost-cutting, trying to decrease the number of plans before TPG gets into the market. And then I guess if you have a look at longer term, you're still searching for that growth. But just having a look at Telstra's share price, this is the fourth consecutive year where we've seen share price declines. And in fact, since the peak that we saw a few years ago in 2015, we've actually seen Telstra's share price declining 60% in value. So it has very much been in this downgrade cycle with competition intensifying. And I guess the key question for investors, if they do want to get interested in this stock, because most people seem to be jumping ship at the moment, is when is that tide going to turn? When is that acceleration in negative news going to desist, and when are we going to start to see incrementally positive news? And I guess in terms of its earnings, next year should be probably the worst of the NBN being over for Telstra, 5G starting to kick in, and hopefully by 2020 perhaps some of the technological developments will start to help Telstra's share price and most of the bad news will be out. So look, we're 4 years into pretty much a downgrade cycle for Telstra, 4 years of share price declines. And I guess the next thing is getting a clearer picture in terms of growth and also a clearer picture in terms of when that revenue decline might change course. The key question, I think, for the markets is, will Andy Penn be the CEO when we're past next year and perhaps into a more easier time for Telstra?
We will see. We will see. Julia, one company that we didn't talk about a lot because of, I suppose, the Telstra announcement, McGrath. So we had a bit of an announcement coming through, selling a 15% stake in the company to a property developer, $10.7 million cash injection. Is this the big turnaround needed at McGrath, or how do you put this in perspective?
Look, I think this is a smart move for both of the parties to the transaction. It comes at a time when we know that property is pretty weak here in Australia, and they could probably leverage off each other, both in terms of trying to sell those developed properties as well as increasing exposure and, I guess, finding another source of revenue for McGrath. So, look, the fact that this placement was done at a 25% premium to the last traded price meant that, the shares did see a big performance performance today. The shares were up 25% on the market. And let's face it, property is cyclical. So it makes sense to do deals like this when the environment is weak, to try and increase revenues in a declining revenue type of scenario and try to combat the cycle in some way. So look, I think this is a smart move from McGrath as well as Aqualand, and hopefully they'll be able to leverage off each other.